Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat. Paris milling wheat. In late May, prices moved down and away from arguably the most difficult overhead congestion on my daily chart between 267 and 270, where the market was capped and turned into a V-top. Prices headed lower within a June-based quite acute bear channel, exiting out at the gold long moving average, currently at 225, with nearby influence from the significant supports at 227, the now flatlining medium moving average, currently 235, the bright red neckline extension, the June to November 2023 head and shoulders top, currently at 237, and under the overhead congestion between 238 to 242, containing the March 2013 high at 240. Of all these, the two most important were and are the bright red neckline extension and the gold highlighted long moving average. Looking below, I said 9 weeks ago, and I quote, "An obvious area of support is further below, starting at the 50% absolute Fibonacci line at 219, and mainly centered around the old descending triangle and bullish halfway hesitation from April, between about 213 up to the 50% absolute Fibonacci line. However, I only point this as an obvious spot, not necessarily a strong support." And that's the end of the quote. The market had in recent weeks hesitated, dipping and pulling back up, forming a late June to date bear channel, currently at 203 to 224, verging on being a descending expanding wedge pattern. It's highlighted in dark blue on my daily chart. For this reason, I said 8 weeks ago, and I quote, "V-tops such as the one here sometimes form a handle or sideways action, usually a pennant or a bear flag on the way lower. Sometimes, and this is very rare, they form a flat rectangle." End of quote. Well, 2 weeks ago, part of this bear channel pattern, the earliest part, morphed from a rectangle into a mid-July, mid-September descending triangle with the base on the May 2023 low at 221, and prices punched lower with, oddly enough, a very small descending triangle that you can just about see on my daily chart around the middle of August. Now, before I deal with the downside opportunity of the descending triangle, I would like to recognize that the pressure in any V-top with an extension would be for lower prices, and so to the potentials below for the descending triangle. And as I said 2 weeks ago, and I quote, "There's been enough for me to lay out some potential targets below for the descending triangle. Thus, primary target X would be down in the 212.5 zone, a secondary, harder to reach target X1 down in the 204 zone." End of quote. Last week, prices dropped enough to reach target X and came ever so close to reaching target X1 before turning up later this week. Overhead, we have the 50% absolute Fibonacci line at 219 before we reach up to the broken base of the descending triangle and the May 2023 low at 221. Meanwhile, below target X1, we have some old congestion at 211, and then nothing much until the lower dark blue bear channel line, currently at 206. Below that is the congestion zone between the July 2021 low at 192 and the congestion at 190. Getting down there would also fill in the in a changeover gap from mid-March between 197.75 and 204.25. Minneapolis wheat. My apologies for some of the bright red labeling on my daily chart. My charting package sometimes throws a wobbler and does this sort of thing. There is no special significance in the red labeling. So back in late February 2023, and especially at the start of April last year, so that is now outside the parameters of my daily chart, the market constructed a large bear channel that morphed into what is now on my daily chart, a descending expanding wedge pattern, currently 681 to down well off the bottom of my daily chart. The upper trend line is currently escorted and reinforced, and has been for some time, though not very well recently, I have to say, by the declining long moving average, currently at 674. I've kept this breached, large, original descending wedge pattern still on my daily chart, as the others that were here originating from August, September, and October 2023 through to April 2024 have all been thoroughly broken, and this largest one is still here, even if it was breached as a just-in-case situation. Going back to the market action, prices turned lower for V-top at the end of May, heading down in a very narrow and acute bear channel. The market exited out of this pattern at the start of July. Held up by a combination of the October 2018 high at 611 and the April 2021 low at 606, and most importantly, on approach to the green highlighted September 2019 to date uptrend, currently at 593, which held things up despite not directly being tested at the time. During the course of being held up, the market created a small horn bottom, but more importantly, a larger pattern. Initially what looked and still does like a more or less sideways wedge pattern, currently 580 to 664, and is highlighted in dark blue on my daily chart. However, within this expanding wedge pattern, the market also created a cat's ears pattern over July. Now, for those of you unfamiliar with this pattern, a cat's ears pattern is in essence a double top pattern seen after a significant decline, such as the decline we saw in June. The pattern was triggered last week with a push and close below the neckline of the cat's ears pattern at 596, as well as below the green September 2019 to date uptrend that is just underneath it. This had been enough to lay out potential below for the cat's ears pattern of target X in the 546 zone. Now, looking below, I said 2 weeks ago, and I quote, "This green uptrend is perhaps the most crucial of all the support levels, as below we really don't have that much support until the December 2020 low at 542. End of quote. So you can see all ties in together, and that is before last Friday's breach of the dark blue lower trend line of the expanding wedge pattern, plus the implications for potential targets below for this pattern, and finally also breaking below the 579 support. So that was last Friday. However, despite all these, the market turned up this week, back up over the dark blue lower trend line and the breached dark green uptrend, and even now pushing through the neckline for the cat's ears pattern. But perhaps this might have been a primary target on the downside. Why did it do that? Turning back up at the 563 level. This perhaps might have been a primary target for the cat's ears pattern, with the target X as a final target, secondary one, perhaps. It may have been the congestion formed from lows in November 2022 that I did not fully appreciate. In any case, the recovery this week is not as strong as in other grain markets, with no opportunity for a weekly key reversal up here. So for now, the cat's ears pattern target X below, down at a 546 level, still stays. London UK feed wheat. I'm sorry this daily chart is so colourful and condensed, but there is a lot going on here in a relatively narrow range. Okay, so the extension of the neckline of the May to June 2023 reverse head and shoulders bottom, currently at 195.45, has been an important recurring dynamic level on my daily chart. It helped cap the prices in early May, eroding the bullish incentive, such that the market was ultimately capped later on in May by the August 2021 high at 199.20 and the March 2013 high at 205.05. Altogether, these created a V-top pattern with a very sharp downward slope that became, and here is a leap of faith, the leap of faith I'd previously asked you to make, and do so again this week, became a V-top with a ghost extension. And that was caused by, this ghost extension was caused with the changeover in early July. The construction of the second part of the V-top was the very late May to late June, very acute and narrow bear channel. This bear channel overcame all the congestions on the way down, except the one at 164.95, just above the combined lows of July 2021 and May 2023 at 164 even. This caused the market to exit out of the small bear channel. We then had a changeover gap, a large one, between 170.40 to 196.95. And we have created since a descending wedge pattern, currently 183.80 to 188.50. And that's highlighted in purple on my daily chart. The big leap of faith is to imagine the descending wedge pattern tagged onto the end of the small bear channel, and thus we would have, as we have seen elsewhere in the other grain markets, a V-top with an extension, only here in truth it is not. Nevertheless, there was potential for lower prices, possibly as far as the June low at 164.95. And prices last week and the week before tried and seemed to confirm a break lower, below the purple lower trend line. This move back then gave potentials for the descending wedge pattern, a primary target down in the 180 even zone with a secondary harder to reach target X down in the 169.90 zone. The primary target at 180 has already been achieved, with prices pushing below and closing under the green short medium moving average, currently 184 even. The dark blue medium moving average, currently 184.5. The September 2021 low, 181.70. The 50% absolute Fibonacci line at 180.5. And even plunging below the combination of the March to May 50% Fibonacci line at 178.25, and the gold flatlining long moving average, currently 178.60, and the bright red middle time, currently 177.30, of the recent late May to early July bearish shift pitch walk. However, and it is a big however, of these last three, prices pierced and breached them but did not close under them, utilizing their support to recover, admittedly not by much, as we are still well within last week's range, but they have caused a recovery. Hence, though we have bounced, it looks right now like a bounce that may not be sustained. Hence, watch these three supports again closely in case we see them tested. As below these three, we next have the dark blue lower time, currently 172.15, of the significant early March to late June bullish Andrews pitch walk. This last dark blue pitch walk is the only bullish pattern, bar I suppose the gold long moving average, which is flatlining anyway, left on this daily chart unless the market chooses to construct a new pattern. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Service International Limited. And here comes the final important bit.